Hey everyone, my name is Julia and you're on the Market Monkeys channel. So dividend picks, this is actually a new topic on this channel, but if you follow me on Seeking Alpha, you know that I've been looking for the best dividend picks for a while now, and turns out that many investors are looking for the best dividend stocks as well. So get ready, because right now we're starting the whole series about investing in different dividend instruments. If you want to create a passive steady income from your portfolio, don't forget to like this video and subscribe to our channel not to miss our next dividend ideas. So today we're talking about JEPI. JEPI is actually one of the most talked about high yield dividend ETFs, and there are many questions to unfold. First of all, is JEPI safe? How safe it is? Is it volatile? What type of investor it's best suited for, and how long should you hold it for? Today I'll answer all of these questions, so watch until the end. First, a little bit of a backstory so you will understand in general what I'm doing here. I do not have a dividend portfolio myself, but my husband does, and he just recently got the idea of creating this dividend portfolio that will actually make him the second salary in a few years from now. And I'm trying to help him, I'm hoping to help him with this goal of his. By the way, he's not even 40 yet, so right now he's adding more risky instruments that bring him the yield of between 10 to 15%, but he still owns JEPI and the sister fund JEPQ. So what is JEPI? In short, this is JP Morgan's grown-up version of a covered call ETF. You've probably seen a bunch of funds that are hyping the massive yields by selling calls. Some do it well, some do it not so well. But JEPI is actually slightly different, because JEPI is run by a team of professionals at JP Morgan who've been doing it with billions of dollars for years, and they have their own money invested in this ETF, so their motivation is clearly high. Another great thing about this ETF is that they pay monthly dividend. The yield is pretty solid without draining your initial investment, or without the return of capital, which some of the funds like to use in order to create this illusion of a high yield returns. Now let's talk about how does JEPI do what it does. First of all, instead of selling options on each individual stock it owns, and you can only imagine it would be a chaos for a fund this size, they use an instrument which is called equity-linked notes, or ELNs. Right now on your screen you can see a professional explanation of what equity-linked notes are, but just to explain it shortly and simply, you can think of them like a shortcut. Basically, these notes mimic what would happen if you sold covered calls on the entire S&P 500 index. So JEPI basically collects option premiums from the ups and downs of the market, but at the same time they hold their own carefully picked stocks that are pretty boring, but I mean it in the best way possible. Right now I want to read out a quote from Summary Prospectus from JP Morgan, so you would understand better the main strategy, or how JP Morgan sees their main strategy. So they say that the investment objective of the fund is to seek current income while maintaining prospects for capital appreciation. The fund seeks to achieve this objective by first creating an actively managed portfolio of equity securities comprised significantly of those included in the fund's primary benchmark, the S&P 500 Total Return Index, and through equity-linked notes, what we just discussed before, selling call options with exposure to the S&P 500 index. The resulting fund is designed to provide investors with performance that captures a majority of the returns associated with the S&P 500 index, while exposing investors to lower volatility than the S&P 500 index, and also providing incremental income. So basically this combo, steady companies together with the smart option strategy, is the reason why JEPI is able to pay these monthly dividends. And this is one of the reasons you can buy JEPI return on dividend reinvestments and actually to forget about this fund forever. You don't need to babysit it all the time, because managers of JP Morgan do this for you. And I want to stop here for a second longer. I already mentioned a couple of times that they have a group of managers that are actively managing the holdings of this ETF, and this is actually the reason why you might see a very high turnover, because they basically buy and sell stocks all the time. They all the time rebalance it as they see fit. For example, it's very easy to see that they're not blindly copying S&P 500 by the fact that tech makes about 20% in JEPI, while in the S&P 500 it's closer to a third. Instead, you'll see more consumer staples, industrials, healthcare, and basically this is on purpose. JEPI is a very safe kind of investment relative to the yield it provides. They actually try to make it less volatile. But here is a very important thing you must understand. If the S&P 500 or if the whole market will be flying up, JEPI won't be flying up by as much. This is not an ETF that will help you get rich on the market upswings. This is basically a defensive instrument that you will be very glad you bought if the market turns bearish, because if everyone will fly down, JEPI will fly much less than the S&P 500, and plus besides of this you will still get your monthly dividends. Another important thing you need to know about JEPI, that these payments are actually taxed as a regular income. So if you're holding JEPI on a taxable account, be ready to pay more tax by the end of the year. So it could be smarter to include it in the IRA or 401k to avoid this headache, but this is up to you, of course. Now I would like to compare JEPI to the similar S&P 500 ETFs, and I think this information could be useful for you, because right now I'll show you a little bit more volatile and a little less volatile ETF that could be actually a nice alternative to JEPI. So if you look at now S&P 500 high income ETF, that one basically just sells covered calls on the whole S&P 500. Very simple, very indexy. They do not have a group of managers. Basically, they do not have anything that we just discussed about JEPI. Basically, when the market flies, when the S&P flies, this ETF will fly together with it. When the market crashes, it will also crash to the same extent, but they have a higher yield than JEPI. So if you're younger or if you want more exposure to the market upswings, you could get for yourself SPYI as an alternative to JEPI. Then there is also KNG, which is almost the opposite. It invests in dividend aristocrats and does a softer option strategy. So basically the ride here is smooth and calm. Most likely, even if the S&P 500 is up, as you can see, KNG might be down, but right now they have even slightly higher yield than the JEPI. So basically, if you're looking for a more conservative version of JEPI, KNG might be the choice for you. By the way, I'm not comparing JEPI to the JEPQ, the sister fund, because they are not alternatives. Basically, you could hold both of them, because JEPI is the S&P 500 based income ETF and JEPQ is a Nasdaq based, basically the same structure, just for Nasdaq. So they are different enough for you to hold them at the same time. So who should own JEPI? If you want a steady monthly income and you hate surprises, JEPI will be the perfect candidate for you, and this is basically the reason why many retirees hold this ETF. Besides of this, even if you're younger or even if you're a very young investor, JEPI might be a nice way to secure your bottom line when the market turns red. But keep in mind that JEPI shouldn't be your entire portfolio. Most investors combine it with different instruments. You could be REITs, it could be BDCs or some growth funds. Basically, you need to understand what is your risk tolerance, what are your goals, and according to this, to create this mix that will satisfy all of your needs, not only when the market is green or not only when the market is red. If you found this information valuable, if you found this video helpful, don't forget to support this channel by pressing the like button, subscribing, and I hope to hear from you in the comment section. Thank you for being with me. See you on the next video. Happy investing!